Hi, my name's Spencer. I work for the Department of Banking and Finance as a financial institution examiner. So what are the differences between a credit union and a bank? One of the main differences between a bank and a credit union are the ownership structures. A bank is typically held in ownership by the shareholders of the bank themselves. A bank can be privately held by a number of individuals, trusts, entities, companies, or can offer shares to the public. A deposit, loan, or trust at a bank does not imply ownership of the bank. A credit union, on the other hand, is owned by the depositors of the credit union, referred to as members, and deposits referred to as shares. Outside of the exception of wholesale funding, such as borrowings from another institution or broker deposits, having shares at a credit union gives you partial ownership of that credit union. These share accounts have minimums to open and maintain, typically ranging from $5 to $25. Another difference between credit unions and banks is the tax liability structure of these institutions. While the type of corporation can vary from a C corporation to a sub-S corporation, all banks act as for-profit institutions and as such are subject to corporate taxes, both federal and state. A credit union is a nonprofit organization as per 501c1. The final difference between credit unions and banks are their operations. Typically, credit unions offer more consumer loans, such as car loans, credit card loans, unsecured or signature loans, and payday alternative loans, also known as PALs. Banks can be consumer-oriented in nature, but are more likely than their credit union counterparts to offer loans to businesses, agricultural operations, municipalities, or other institutions. A reason for the difference in makeup can be drawn to the fact that credit unions are typically smaller than banks. The reason for this is due to the field of membership requirements of credit unions. A credit union is chartered to serve one or more groups of people sharing a common bond. Fields of membership can be broken down to three categories. Community or residentially based charters serve geographical areas. Single bond charters, who serve shared characteristics such as occupation or religious affiliation, or multiple common bond charters, which serve a combination of both. Due to this limitation on serving to specific groups, it is typically harder for credit unions to grow than banks. And finally, for rates. Credit unions will typically offer higher rates on shares in comparison to other banks and lower rates on loans. Credit unions are often required to provide profiles to the National Credit Union Administration quarterly, and they, in turn, release these to the public. Information such as demographics of members, website location, services provided, and physical locations of branches can be found on these profiles. To research your local credit union, go to mapping.ncua.gov/researchcreditunion. Thank you.